$55 billion. That's the number that just changed the game for Electronic Arts. It's the largest leveraged buyout in history, and it's got everyone in the finance world talking. We're not just talking about a big deal, we're talking about a behemoth. Now that we know the cash pay per share, let that sink in. $210 a pop. That's a 25% premium over EA's pre-deal stock price, which was a relatively modest $168.32. This is amount, and it's clear the buyer is willing to pay top dollar to take EA private. That 25% premium is amount, and it's clear the buyer is willing to pay a significant markup to take EA private. I'll be honest, that's wild to see a premium that high, especially on a stock that was already trading at a relatively high price. It's a sign that the buyer is confident in EA's future prospects and is willing to pay a premium to get control. So, EA's unaffected share price before the deal was a relatively modest $168.32, but that modesty didn't last long, did it? The buyer was willing to pay a 25% premium on top of that, which is amount, especially considering the total deal value is $55 billion. That's a scary number, and it's clear the buyer is all in on EA's future prospects. So, we know the buyer is willing to pay top dollar, but let's take a closer look at how they're funding this massive deal. $36 billion of the total $55 billion is being funded by investor equity, a significant chunk of the overall cost. That's a substantial commitment from the investors, and it's clear they're putting their money where their mouth is. So, $20 billion of that debt is being committed by JPMorgan, which is a significant chunk of the overall funding. That's a lot of money, and it's clear JPMorgan is confident in the deal's prospects, or at least in the buyer's ability to pay it back. Of that debt, funded right at closing, is $18 billion, which is a significant chunk of the $20 billion committed by JPMorgan. That's a lot of money to be borrowed and paid back, and it's clear the buyer is counting on EA's future earnings to make good on that debt. Let that sink in. $18 billion is a massive amount of debt to take on, and it's a big bet on EA's ability to deliver. Hey guys, I know we're still wrapping our heads around the EA buyout, but let's talk about another way to get ahead in the game of life. I've been experimenting with this online learning platform, Earniculum, that actually pays you to learn. It's like getting a stipend for leveling up your skills. You take short courses, build real skills, and earn money for completing them. It's ad-supported, but you can upgrade to an ad-free experience if you prefer. Earniculum's still in early access, so if you're interested, you can join the waitlist at earniculum.com. Check out the link in the description below for more info. Now that we know the buyer is willing to pay top dollar, let's take a look at the ownership stakes. Saudi PIF's ownership stake post-deal is 93.4%, which is a clear indication of their confidence in EA's future prospects. That's a massive amount of control, and it's clear they're not just investing in the company, but also in its direction. The previous record LBO was $45 billion, set back in 2007 with the acquisition of TXU Energy. That deal was a behemoth in its time, but this one is even bigger, with a total deal value of $55 billion. It's clear that the buyer is willing to push the boundaries of what's possible in a private equity deal. Now that we've seen the massive debt and ownership stakes, let's take a step back and look at the bigger picture. The chart shows a steady rise to the peak, with this deal dwarfing the previous record. It's a clear indication that private equity is getting bolder and more aggressive in its pursuit of big-name targets. The chart shows a steady rise to the peak, with the $55 billion deal value far surpassing the previous record. It's a clear indication that private equity is getting bolder and more aggressive in its pursuit of big-name targets. The shape of the chart is a steady upward trend, with a sharp peak at the top, highlighting the massive scale of this deal. Here's the part that gets me. The buyer is committing $36 billion of their own equity to this deal, with the remaining $20 billion coming from debt and $18 billion of that funded right at closing. That's a huge bet on EA's future, and it's clear they're not just looking to flip the company for a quick profit. What's really surprising is that this deal is so massive, it's not just a record breaker, but it's also for the entire private equity landscape. Let that sink in. A single investor is putting in $36 billion of their own equity, with a 25% premium on top of EA's pre-deal stock price of $168.32 per share. That's a bold bet on the gaming giant's future, and it's clear they're willing to take on significant risk to make it happen. That's the math nobody shows you. The sheer scale of this deal is, and it's clear that the buyer is all in on EA's future. Now, let's see how this massive bet plays out. Will it pay off, or will it be a costly mistake?